Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello, and welcome to the podcast. Thank you very much for being here. I appreciate you. All right, today we are going to talk about premium mindset. It has become a topic in the last couple of weeks, and I want to remind you guys about how to think about premium. And if we go back to Nelson's book, Becoming Your Own Banker, so if you have not gotten, and let me grab it off my desk for those of you watching video, if you've not gotten this book, there's no reason why you shouldn't have it. So go to farmingwithoutthebank.com and grab this one if you haven't gotten it. That book is truly the Bible of what we're doing here for infinite banking. And so if so many people, if you go back to Nelson's book, and he talks about the fact that the more premium you put in, the better. We should be trying to get as much premium through these policies as we possibly can. And recently, as I've been talking to people, their mindset is, oh, well, I can only put profit or gain through the policy. And that's not entirely true. So what we're doing is we're thinking, well, let's pay the least amount of money in premium that we can, instead of Nelson saying, hey, we should be paying the most amount of premium that we can pay. Now, there's two extremes. Some people think, oh my God, I want to pay as much premium as I possibly can. I want to put every dollar through. Well, that is a bit extreme. Okay, it's just a tish bit extreme. But we should be putting a decent quantity of premium through the policy. So this is what I'm seeing. I'm seeing some clients who are paying premium and then they're not borrowing it. Okay. And then I'm seeing some people that are saying, I can't even pay my premium because I don't have enough money to do that, because what they're doing is they're paying premium after they've paid cash for all of the things that they need. So let's talk about both of those. The person that has the mindset that is, oh, I'm going to pay this premium and then I'm going to use it as a savings account. I'm not going to touch that money because that money is there so that I can have my dream home. That money is there so we can buy a new car at some point. That money is there for whatever reason, right? They make that their emergency fund. Why? Now you have money sitting in cash value that's not making you anything. Remember, money has to flow. If the more you put your money to work, the more money you make. So leaving it sit in cash value isn't producing anything. It's earning compound interest and dividends, but it's going to do that regardless if you borrow against it or not. And so why are we just allowing our money to sit there? So that means to me that if you have money sitting in cash value, that the money you're putting into the policy is extra money because you never need to borrow it. So you're only funding your policy with what you want to save. That's not the intent of the policy. And so if you are funding your policy with only money you need to save, you're not putting enough premium in. And you're not putting enough premium in because you think that you don't have the money to put extra in. That leads us to the other person who says, well, I can only put in after I purchased. So you're essentially the same people, you're just thinking about it differently. Like the person that says, well, I'm going to go pay everything with cash and then I'm going to put profit in the policy, that person is putting money in and they're borrowing it most likely to use, but they're not funding it like they should. Let's just use an example. So if you are somebody that says, you know what, I have this huge repair bill for equipment. So I am going to pay cash for all the repairs, but I'm not going to put more money through the policy. In fact, you might have a policy with me and you're paying the minimum premium. There's a minimum and a maximum. And I've talked about this before. The minimum is so if all hell breaks loose, you can continue to save that policy. But when I say all hell breaks loose, the only reason you should ever be paying minimum premium is if you absolutely do not have the cash that you can run through the policy. There should be a handful of my clients paying minimum premium, and I have a boatload of them doing it. So that means you're not understanding the concept. So if you are paying, let's say that your minimum premium is $20,000 and your maximum is 40. So if you say, well, I can only pay 20 because I had to put fencing up, I had to buy some cows, I had to, have repair bills. Fertilizer went up, so I paid cash for that. What? What? Why would you not take the extra 20 where you're paying cash for things and put that through the policy? Okay? Think about it. I had a meeting yesterday with some clients that they're trying to start a second policy. They don't know how much premium they should pay. And they're like, oh, we just don't have that much money to put that much more into a policy. And I looked at their current policy and they have a whole bunch of money sitting there. And I said, what are you doing with all that money? If you don't have money to pay another premium, but you're not even borrowing the money you have now. And she said, well, we're saving that, for a remodel on the house. I'm like, why? You have money in cash value, but you're borrowing money from the bank to operate, and we're not doing the remodel right now. So why wouldn't you just borrow the money from your policy, pay it back, and then when you're ready to do the remodel, you have the money? And she said, oh, we have the money in there. I guess we could buy sheep. Oh, that's even a better option because now the sheep are going to create cash flow. So let's use that money to create cash flow. And then the sheep, we can pay the policy back when we sell sheep, and we still have the money to do the remodel at some point, right? And so what's happening is we're only paying premium when everything else is paid for with cash. So we've paid our operating back with our income. We've, maybe done some repairs with the income. We've put some extra money into the business. We've put some extra money into the rental properties. So we've done all of these things with cash. And then we're saying, oh, we don't have the money to pay the premium. And so if I have people that have they're only paying the minimum premium they have to, and then you don't put the extra money in because you don't want to borrow it out to use it. What? Why are we not borrowing against it? So change that thought process. And, it sounds like I'm being mean, but I had the same conversation like 3 times in the last week. So yes, I'm going to challenge you to think about how you're using money, because utilizing money by paying premium is not how we're maximizing the use of that money. We're maximizing the use of our money when we borrow against it and we use it for things that create cash flow. Even if you have to use it to buy a car or remodel a house, it doesn't matter. But having it sit stagnant does nothing, right? Think about the fact that you can have a pond of water or a slough or whatever you've got, and all of a sudden, it's just so gross the cows don't even want to drink out of it, right? It becomes completely useless. That's what's happening to your money sitting there. It's doing something. It's there. It's providing a benefit, but it's just waiting for you as it's just getting old. Okay? You need to, that may have not been the best analogy in the world, but it's the one I came up with, people. I want you to think about your thought process around the money. You pay your premium, we borrow against it, and yes, you need to pay it back. But whatever you borrowed it for should make enough money to pay it back. If you've set up a policy and you're just paying that minimum premium, why? Why are you not running the money through? Because you're thinking, I need to have excess cash. Okay, do you? What did you use that cash for? I've talked to people that are like, oh, Mary Jo, I can't pay my full premium because we just got done with the $3,000 vacation. Are you kidding me? Put the money through the policy first and then borrow against it to go on vacation. You have an entire year to pay it back. But there should not ever really be a scenario where you absolutely cannot pay your premium because you would make the payment to the bank. Worst case scenario, if you can't make a bank payment, then you can't maybe make your premium payment. But if you can always make a payment to the bank, you can make a payment in premium. If you are there, this happens too, where people will say, oh, Mary Jo, I can't afford that much premium. They'll meet with me and I'll have an idea of how much premium they can pay. And they'll say, I can't afford that much premium. And I'll say, oh, so if you needed a new tractor, this would be the payment amount. Would you buy that tractor? Oh, yeah. Yep. Okay. So you're going to find a way to make the tractor payment. So why can't you find a way to make the premium payment? And don't tell me it's because that tractor can make me income. Because if you pay the premium and borrow against it to go buy the tractor now makes enough money to pay for itself and to pay next year's premium, right? So we have to get out of the mindset that this is the extra. Oh, if I have extra, I can put money in the policy. It should be, okay, what am I using my money for? What am I paying cash for? That I could first put that in the policy and then borrow against it to pay that, to buy whatever it is I'm going to buy. Am I putting a building up with cash? Am I buying equipment with cash? Am I buying cattle with cash? What am I doing with my cash that I should be putting it through the policy first? It's hard. I get it. I have to remind myself as much as I remind you guys. And let me tell you, I've had to remind myself a lot in even the last year. Okay, Mary Jo, put the money through the policy because I also tend to spend cash. So I'm going to watch this again and just preaching to myself. But we have to, just because the premium is flexible, does not mean you should be using the option of flexibility. People use that so then they can go make excuses that, oh, we needed X, Y, and Z. You don't get X, Y, and Z unless we put it through the policy first. Your policy should get paid in full, and then everything else should happen later. Treat that policy premium as if it is a true expense on the farm, which it should be. Treat it like an expense so that you can turn around and borrow against it on the other side. But if we're not filling those policies full, if we're putting a little bit in, you guys have heard me say it a million times, you put peanuts in and you get peanuts out. So make sure that you are thinking correctly. If you don't know if you're thinking correctly, then make sure you're calling me and saying, hey, Mary Jo, we need to have a meeting. What about this? What am I doing that needs to change? Because I'm not talking to you guys enough. If you are clients of mine and you haven't talked to me in a year, we need to talk. So make sure. And the more that we talk, the more I challenge. And a lot of you are listening to the podcast, and I love it because that's also challenging you. And a lot of times you're reaching out and saying, oh, okay, well, you know what? That podcast made sense. The fact that you can get through my squirreliness is absolutely amazing to me. Because let's just be honest, I'm not the most detailed person in the world. All right. So I hope that helped a little bit and made sense. If it didn't, let me know. Nobody ever tells me things don't make sense. I rarely get negative comments. I am okay with negative comments. I rarely get them. So there's no way that I'm perfect out there. Let me know if there's anything that I can do to help, continue answer questions, whatever. email me, maryjo@withoutthebank. If you are a client and you are listening to this and you need to get in, and if you go to my calendar, you probably can't get in for a little bit, make sure you call the office so that we can figure out how to get you in, or email me. And if it's a question that I can answer over email, I'm happy to do that. If it is something that I need to call you back for, I do have time throughout my day in between meetings that I can call you back. So don't sit and wait forever to get a hold of me, okay? Because I am way more, I have way more time than what my calendar makes me look like for clients. Now, if you're a new person, you're going to have to wait till the end of June at the moment. So I apologize for that, but it'll be worth your wait. I promise. I promise. All right. Let me know if you need anything. Otherwise, go grab the books at farmingwithoutthebank.com, and we'll talk to you in the next episode. Have a great rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.